Hi, Green Cross Paddy here. This is a chart about Martin Armstrong Cycle. You may have heard of Martin Armstrong. Martin Armstrong is in prison in the US under some trumped up charge of embezzlement because he developed a very accurate Armstrong cycle based on the Kondrativ cycle, which predicts accurately economic confidence and the rise and fall of markets. It's no conspiracy theory to work out why he's being held without reasonable charge when you see the damage that can be done to the investments of the market if people buy into his cycle. Not only will the natural cycle happen as normal, but it could be accentuated by people's belief in it. So, ever since the accurate predictions that Armstrong made up in the 2000s, we have seen that the US government has tried to manipulate the market. That's my belief. Now, this is a chart which tries to eradicate the manipulation since the 2007 8.6 year cycle high, which Armstrong predicted. February the 27th, 2007, there was a 600 point crash on the Dow, very similar to the crash we had last week, where the market went parabolic, and they blamed all sorts of things for why it happened, and they also closed the market, or they found buying come out of nowhere to recover the market, all in a huge rush. I do remember the Trin on the day went through the roof all within 1-2 minutes. So it was like an orchestrated push of buying stocks. So here we have a chart. I want to show you the candles are the Dow. The blue line is the S&P. It's pretty much in line. I would just check that the S&P and the Dow are pretty much aligned, because the S&P is obviously more reliable indices with a greater spread of investments, and the Dow can be manipulated very easily. And one of the ways that the Dow has been manipulated over time is the manipulation of stocks like General Motors. There's a lot on the web about the manipulation of General Motors stock over the last 10 years. Anyhow, we have the top in 2007, which Armstrong predicted, and then we have a phase where the market went to a new high, which you'll see on the PE ratio chart I've got on the channel is a divergence. So the market reached new highs without the PE ratio being a typical high. So it was a bit strange that the market rallied. I lost a lot of money shorting the market after 2007, I have to say, because this action did catch everyone by surprise, because it was not meant to happen. Now, what I've produced here is a green line, which is the revised chart, and this is the S&P chart if the manipulation phase hadn't happened. So what it is it's looking at cutting out the whole of that section where the high of 2007 was invalidated by manipulation, and then we reconnect the chart, and this chart shows you what the chart would have been like if the phase, that new top, hadn't happened. And the reason why we want to do this is because this manipulation, which filled the market, put the beat of the highs and lows that were predicted by Armstrong on hold. It completely threw them off, and if we take it out, we can see whether the beat of the market would be normal, and you can see that the predicted highs and lows, and this high that is now predicted here in the action, which is pretty much around about the time we've just had that major top in the market, then they do seem to correlate once you remove that action. But like a concertina, the Fed pushed in some action into the market, which has artificially pushed the highs and lows out. The amount of market action that we now have left till the low that is expected in the 18th of June 2011, we have the market going to be trying to make a low from this point, which is May 2010 to June 2011. All that is falling on the Armstrong cycle. I don't think they're going to be able to postpone a major low in the market, because regardless of all manipulation, these are key swings. You can fiddle with the Armstrong cycle, I reckon, during less important points, but major highs and lows, I think they're going to have real trouble. Might be able to postpone it a little bit, a month or two, but I don't think they'll be able to postpone it much longer than that, which means we've got a lot of selling to do over the course of the next 13 months, which should have actually taken place over a much longer period, because the Armstrong high was set to be in April 2009 for a sell-off into June 2011. Now that means we've got half the time to fill with what action there should have been for 2 years. So the selling will be sharp, the rallies will be sharp. It'll be the same price action is going to happen over half the time scale. So you're going to have twice as fast reaction times, I reckon, than the way you would normally have had to trade. That's just a feeling I've got, and just to lend some support that this is definitely a major top in 2007. The quantitative analysts say that 2008 onwards is the winter phase, and there should be a global recession from 2008 for a good time. So I do see that this is going to play out in this way. I can't see it happening any other way. And we have here the volume on the Dow Jones. We have had very strong volumes going into this selling. Climactic levels, and then a divergence to mark the low in beginning of 2009, which led to this rally. But the strength of the volume is in the selling, not in the buying. You can see this rally here, the buying volume has been reducing over that period. So I would say this is quite an accurate chart. I do strongly believe in the Armstrong cycle. Just on the long term, the very long term Armstrong high is 2034, I think, or 2032, somewhere around there. So we are going to see confidence come back after this very major low in 2011. Whether that means that prices will be higher than the last high of 07, I don't know, because if that's a wave 5 before the big winter phase, then we might not reach that high. It will depend very much on inflation or deflation, and I don't know if we can predict that accurately on that. But I do think we'll have a deflationary phase marginally during the course of the next 20 years, which is seen to be conquered by the actions of the economists that are running the governments, and they'll trumpet that they have conquered deflation and the risk of deflation. But in 2034 the collapse will happen, and that will be a very bad deflationary period. It has to be predicted. I'll show you sometime or other a very long-term inflation versus depression chart, which I had a look at not so long ago, and you'll see we have been without deflation for over 100 years, nearly. Sorry, 80 years now, and it's going to come back. It has to come back. Over time, we've always had periods of inflation and deflation, and that will not change. Thanks for watching.